We are doing a show this morning on the last week or so. You guys have probably been like, hey, you guys are real estate private lenders. Why are you looking at the stock market? Well, I am a avid nerd geek of the stock market for about 20 years. And one of the reasons I look at it is because it goes hand in hand with the real estate market, right? Like the real estate market and the stock market, when you watch 2008 crash, it was almost like a simultaneous thing. But most of the time, there's a little bit of a lag from the stock market to the real estate market, 3 to 6 months. But as a lender, it's important for me to see what's coming down the pipe. So not only do I like it, but it also gives me a lot of insight as to what's coming in the lending portion of what we're doing, because it's going to show up in the markets before it shows up in real estate. Real estate is just not that liquid. So Ryan, why don't we talk about what we saw overnight? So I guess, why don't you give like a round out for where we are and like what's going on, so everybody can kind of get caught up that's watching it now.
Yeah, I mean, let's start with last week, right? So many people probably heard mumbling of the company Evergrande in China last week, because there's a big red day, meaning big sell-off. Caused a little bit of people to start watching the news, saying, okay, what's Evergrande? Started your Google searches, right? But it quickly recovered. As you can see in the chart that Ian has up on the far right, you see the big red candle and it goes green. Everybody forgets about Evergrande already. So then we started following a little bit of news on the government. Are they going to pass the ceiling yesterday, the new debt ceiling, or are they going to shut down? And just going right into yesterday, what happened was it did pass. Not fully, but they kicked it down the road, as the government typically does, until December 3rd. Either way, this should have been big news. The market should have said, yes, we're very happy about this, and gone up. And it didn't. It did the exact opposite. And as Ian has said multiple times, when you're in a bear market, good news doesn't move it. Just how when you're in a bull market, bad news doesn't move it. So it was very concerning for anyone who's in a bull market, saying, hey, why didn't this boom up? And now the news still didn't come out as of yesterday. And then all of a sudden, around 11 p.m., we start seeing some news articles about our good friend Evergrande that showed up last week. So here we are, the following day after the government shutdown was like fast forwarded. Now Ian has done a pretty good job making a lot of these. I don't want to say calls, like he's not predicting the future, but what he's saying is, here's going to be points of contention. Watch to see what it does, because if it hits here and goes this way, as the analogy we've been using is, we're watching a storm. We're watching a Category 5 hurricane. And what we're saying is, if this goes inland, be ready, right? And it appears to be possibly going inland. So how's that as a recap, Ian? What do you think?
Yeah, it's pretty good. So, we said, first of all, everything here is not investment advice. Don't do anything I say. I'm always wrong. Don't use my information as anything to put your actual money on. This is just what I see and what I'm looking at, but do not use my information or our information. So I guess like 2 weeks ago, I started to notice in the charts, when you kind of look at like this area right here, this was like the big trend line. Like we had just been kind of cruising throughout the summer. This is a daily on the Dow, right? So we've been cruising throughout the summer here. No big deal, a couple hiccups. And then I was like, whoa, we hit this trend line right here with this candle. And being a chartist, right, price can't lie. So no matter what's going on in the news, the biggest money in the world will move their money before the news actually drops. So I get to kind of experience and see in the charts where that's happening. And right here on this candle, it just flagged me. I had thousands of hours of looking at these screens, knowing when things are moving. And I said, something's not right. We're attacking this line differently. And so I started to like comment, I think, on the videos saying, hey, look, like, this is different. Everybody's got to be careful here. And this was back here. And I still didn't know we didn't know Evergrande existed. I just knew something was coming right here. Because I think at this point, it was like right around here. And I was like, if we start to see like 1,000-point days, look out, like really look out. So then we went and we're tracking here, and I'm like, man, this is not looking good. We're breaking the trend line. Then you go to the green candle here. Buyers tried to come in, they failed, and then we had the big gap down to here, which is really a 1,000-point day. And I'm like, oh my gosh, it's happening again. Like we saw this during COVID. This is what happened right before COVID. Holy cow, it's happening. So, and then I realized, okay, we've now broken the trend lines, and it was this bar right here when Evergrande was in the news, or really started to become the news. Now I know Evergrande's been around for a year. Like their whole mess has been happening for a year, but they brought it to the news front in this past week or two because it's time. Like it's time to move the market, and that's what happens. The powers that be, the big financial institutions release the news. They know they can drop the market as they see fit to scare everybody into positions, and that's what's happening. So Evergrande comes out here, and I remember I was saying, look, I was telling Ryan, or I don't know, I said it on camera, I said in a week, Evergrande is going to be a household name. And I don't know that I would consider it quite a household name just yet, but people are perking up for sure. And everybody kind of knows this word Evergrande. But then it pulled back, the market kind of drifted because it was just the timing of the days didn't make sense when the Evergrande was supposed to default and stuff like that.
And they did default, by the way. They did not make payment.
Right, they did not make payments, so they're in the default process.
The thing that everybody was waiting for to see are they going to pay or not, and everyone was expecting some sort of reaction. It was like the news just forgot about it or something, and they didn't make payment, and it's fine.
So I think what's happening right now is, so we have this backside retest, which is this move in the market. So we're calling for the kiss of death if you look at the prior videos. So basically what happens is when the market breaks a major trend line, a lot of times, not always, but a lot of times it goes back up to retest to make sure that price was not what it expected. So when we got down here, we kept calling this the kiss of death up here. So what did it do? It ran right up to this trend line, probed it, and then crashed. So then you have these last few days, and to see if this is real, to see if we're really in that move right now off of something we haven't seen in years, is if we get a close under this line. This is just for technical analysis, but it's significant. So if we get a close under this line, which is last week's low, which could easily happen today, we're in a position where we're entering a bear market. So because there's a pivot. So a pivot is basically it goes down, up, down, and then it closes. So it makes like an upside down or reverse N. And then we're heading to this area, the 32,400. So some of the key indicators, though, were like yesterday so if we were still in a bull market, Ryan mentioned this earlier, if we were still in a bull market, good news will rocket the market up. The market ignores bad news. In a bear market, good news doesn't really matter. So what happened yesterday is everybody was kind of poised for the debt ceiling, right? Or we're shutting down the government. And everybody was thinking they're going to do it. They're going to do it. Well, then they were going to go ahead and they said, we're going to delay it till December 3rd. If we were in a bull market, that would have shot this market up. And it barely coughed. Like it went up maybe 200 points and then just got absolutely railed back down because the sellers are here. The sellers are trapping. Good news will get trapped. Buyers will get trapped in these moves right now, and sellers will win out. And when we have 1,000-point day, a couple 1,000-point days in a row, that's pure fear. There's a lot of fear in this market that's not showing up right now in terms of the news, but it'll show up over the next week. You don't get to just have 1,000-point day or an 800-point day, a couple of them in a row, and think nothing's happening. So with that said, expect, but I was wondering, like, if that wasn't going to be what's the looming issue? I still think due to last night's move that the looming issue is China because, Jeremy. Yeah, news acts as a catalyst. Actually, I always say news is what is put out in order to free up the liquidity for the bigger players. So, like, it acts as a catalyst, a liquidity catalyst. This is Jeremy's comment. Actually, I can put this on the screen. So, like, Goldman Sachs knows when they have, like, they want to free up some liquidity, they can drop news on everybody. They can put things in the headlines. But the news certainly acts as it creates liquidity. Everybody's money gets moved around and big institutions can then fill positions. So as we move down through the lows here, you have a situation where, like, we thought yesterday that it was going to rally and it didn't. But then overnight, China, made a comment about what was it, Ryan? There was
supply lines. The supply chains are backed up right now. There's the news headlines were literally pictures of ships, just full, but they're not moving and they're refusing to move right now.
Did they correlate that to Evergrande?
They did. Yeah.
So Evergrande is so big, so big that it's freezing ships out in the ocean. So the issue with Evergrande wasn't necessarily just Evergrande itself, right? The issue are the suppliers of the suppliers of the suppliers. Like everybody has something in their house they're probably touching right now that somehow is being influenced down the chain of Evergrande, right? So everything is getting frozen, and it's starting. So when that was announced last night, there was a huge sell-off into the night. And because we're in a 24-hour market, the markets reflect that. And Ryan, messaged me last night and said, hey, there's a big sell-off. So the fact that we did sell off massively on just news of, hey, supply chain issues says to me that the looming issue is still Evergrande. Even though like yesterday we thought things were going to happen, Evergrande still is, the market is still waiting to say, okay, like we don't know if Evergrande, we don't know, like the masses, the public doesn't know if Evergrande's default, like what extent it's going to go to. Big players do know. And we're seeing the big players shift their money right now in these huge liquidity days, because they probably know it's coming down the pipe. So with Evergrande in the background, but we're not going to really know that, like, that's not going to like unravel for over the next, it'll take like a month, maybe 2 months, but all the while we're waiting for that to unravel, we have other tough news coming out, right? So in a bear market, you have like the underlying theme, which is Evergrande, and then you have other things that come out that just aren't great. We have interest rates that are going to be rising in January. We have the debt ceiling that we're talking about. There's going to be other things that hit the market, and every time the market rallies up, it's going to smash that and hit it back down. Now you're going to start creating multiple pivots. The problem with multiple pivots is that we have a big line coming up right now, and it's right here on this orange circle. So this orange circle, when we get into this 32,400 area on the Dow, is really big deal because it is the major trend line that comes, the most obvious last man standing trend line from the COVID drop, which means the biggest positions in the world that were buyers or bull market, that's the last man standing. That's it. So beyond this trend line, I don't know what happens. I don't know how far we fall. I don't know how much of a bear market we truly enter. And the issue with this trend line is, well, not the issue, but look at the size of yesterday's candle. That is a day and a half away from that potentially happening if we had 2 more of those days. I don't think we're going to get there in a day and a half, but we're that close to getting into this area. And once we hit this, this is where I would honestly think people go, the gig is up, Evergrande failed, barrel down the hatches and good luck out there. Once we get into this. So this is, as we attack this area, look for huge news hitting the market. It's not coming out yet, but it's going to be there. Like I said, Evergrande will be, well, me and Ryan were going back and forth last night about trying to coin like a name. So like every crash or every major incident in the market has to have, like, they have to have the buzzword, right? Like, so we had like COVID was like the pandemic, right? And then the .com bust, and the 2008, the Big Short, or whatever they wanted to call that, or the trade wars. This one, you heard it here first. We're trademarking it. This one is going to be called the Grand Recession. Okay.
Evergrande. The
Grand Recession. I also was trying to do like a play on like Starbucks because it looks like Grande Recession, but I think the Grand Recession is what we're going to be calling this. So when CNN tries to steal that, just, everybody can come back and defend me and say this is where it was done first, trademark. So that's pretty much what we got right now. I think we might do another show later today at the closing bell to see where we are, to see if we aggressively fall under this line. But I think this chart, Rye, you think this chart is like I try to like do like a very straightforward, chart to say like what's 1, 2, 3. Jeremy, yeah, I think the supply chain recession. Okay, supply chain recession, but we need a buzzword. We need like, give me like a good buzzword. Like, I don't know. I can't think of a good buzzword right now.
Grant's got my vote. Grant's got my vote.
Grant's got, yeah, I like Grand right now, but it could be a supply chain recession, but I need like a good buzzword that they can just like say over and over and over again until everybody is sick of hearing it. Like right now, like, you know, I think we talked about this at the COVID crash, Ryan. We were talking about, I was like, you know, the effects of COVID will stop being felt when everybody is sick of the word COVID or pandemic, or if you say that word one more time, I'm going to throw up, right? That is like where we are, right? Like, I don't want to hear, I'm done. I'm over COVID. Like, stop it. Like, I don't want to hear the word again. Pandemic, I don't want to hear it. Right. So like we're all at that point, I think, with like, we need something else in the news. Okay, let's put this in the news, you know? Because I remember in 2008 when the housing crash happened, and it was like, I knew we found the bottom of the market when nobody wanted to even say the word real estate. Like, you just want to be as far away from real estate as you possibly could be. And then I was like, and I didn't know until looking back that that's what the bottom looks like. So this one, unfortunately, the word Evergrande might be the one that we have to wait for. And that could take, right now, I could say at the very least, we're going to be going down for until the new year. But my gut says this is going to take a lot longer than that. I think we're entering in our lifetime, potentially since 2000, the first real, well, 2008, but a real bear market.
I mean, just to maybe throw some devil's advocate on this, or I guess this would be angel's advocate to go back to the buyer side. I mean, you never know. I mean, China's government may come in, do some sort of bailout, and everybody starts moving, right? And supply chain, you know, the hiccups over, right? So I think a lot of that is, it's so unclear right now to the average American, is my assumption here, of what the hell's going on over there. You know, I do think people, you know, the insiders, so to speak, will have a better understanding of it. But there's just a giant smokescreen with China and its government and what information gets passed to, you know, the West here. So I'm not saying it's intentional or not. I think it could just be the fact that, you know, we're on the other side of the world, and it's not the whole situation is not clear to begin with, right? Now add in a government that can do whatever they want, whenever they want. You know, it's just nobody's really sure right now, which is indecision in the market is showing up as well.
Yeah. And well, indecision for the average. I don't see one of the reasons I've been so vocal about this is because I don't think there is indecision for the whales, for the big players. I think it's very clear. That's why I'm like, whoa, I see this. Like, this is right here. Like, you know, that. So whereas like indecision usually shows up for the masses in like where we are now, like we don't really know what's going on behind the scenes, but the charts are very clear in that I don't think there is indecision here. I think this is clear. That's why I'm like that's why I'm saying what I'm saying about it.
I mean, without fail, you know, we see a move and then it's like, you and I are talking, just saying, all right, what are they going to pin the news to on this? Because the money's moved already.
It's moving. Yeah. And it's moving heavily every day right now. And, you know, you can make, if you're trading, you can make a lot of money in this environment. But unfortunately, you know, markets where traders make a lot of money usually means markets that are going to hurt a lot of people on the way down. And that's what, you know, you make your most money on down moves. In terms of in the short term. Long term, I guess you would say you make your most money on the up moves because of, like, you buy and hold a long time. But in the short term, the compounding your money type thing happens in the short term in down moves. So
the moves are bigger. The moves are bigger.
Yeah, faster, bigger, stronger. Yeah. You know, one of the issues I was talking about with, and this is just like way out, is way big speculation, but you know, a guy that I am very spend a good bit of time with in trading and so forth is, you know, he's absolute wizard, just an absolute wizard at the markets. And, you know, he said
that's what we call him, by the way. We call him
the wizard. Yeah. I would not be surprised. He said, I would not be surprised if 70 or 80% drop happens, because that's what a real crash looks like. And I was like, oh my gosh, that's like Dow 10,000, you know? And you go, holy cow, could that actually happen? Like, what does the world look like at that? My answer to that is I have no idea, but that is what a real crash looks like. And it just, you know, it could take decades to recover something like that. But I think we're going to see how much the teeth that this has at 32,000, and we're getting there. Like we're going to probably do a show every day leading up to that because it's coming like within the next 2 weeks or so. We're going to see that.
Maybe twice a day if see how this the afternoon
opening
ends
bell,
here.
closing bell.
Yeah.
So yeah, if today's a mover, we'll come back at the end of the day. If we crack the lows, I think of last week, we should. I think we already did. Did we already crack last week's lows?
No,
last night. We didn't do it last night.
We didn't crack it. We went towards it last night.
Wait, I thought you said we got under. We did. So we did not break last week's lows.
Did not break it. It was about 100 points off of it last night.
The market knows. The market knows. The market's listening to the show.
Pretty much.
The market
this is
knows.
what the whales are watching.
Yeah, it's like no. We gotta wait. Yeah, but when you get that close, obviously, if you get that close and you don't go for it, obviously you took a peek, right? So
yeah, that was off market hours, right? So that's why we gotta see if it's making its move now. I think.
Yeah, the U.S. session still, even though the news is in China, the U.S. session still controls the volume of the market. So if you ever just like pull up the volume on a chart, you can see that the U.S. day session from 9:30 to 4 p.m. are where the biggest participants still are. So there's a lot of movement overnight, but the biggest volume, the biggest institutions still trade from 9:30 to 4 o'clock each day. So, all right, that's about all I got. And I think we'll look to go again at 4 p.m. today and see what the closing bell does. I'll schedule it up.
Sounds good. All right, we'll talk then.
See ya.